For today's exploratory idea, as mentioned, we're going to get into the National Association of Realtors existing home sales data for January, which was just released this week. So from a high level, existing home sales declined 4.9% month over month decrease to a seasonally adjusted figure of 4.08 million homes sold. The price growth is still permeating the market. We're seeing the median existing home sales price increase 4.8% year over year to a figure of $396,900 for your median home sale in the United States. This reflects 19 months of price gains. So for 19 months, we're coming up almost on the 2-year anniversary of almost 2 years of continual price appreciation in real estate. I'm going to put an asterisk there. I'm going to return to that. The affordability challenges obviously are still persisting. Interest rates have not changed in that time, not meaningfully downward for sure. We had a pocket of some relief in August of 2024, and that was about it. Otherwise, we've been kind of humming along here in this 7% margin, plus or minus, depending on the day. And obviously right now, we're seeing some of the lower interest rates. If we look back over the past 52 weeks, we're kind of sitting in the middle of the range of where interest rates have been over the past year. I'm not going to go into each region. I'm situated here in Totowa, New Jersey. Here in North Jersey, we're going to exclusively cover the Northeast and also understand that there's going to be some differences between this national perspective, looking at all home sales throughout the country, and what's happening a little bit more locally here in the Northeast. So sales in the Northeast declined 5.7% to a monthly decline of 500,000 annualized transactions. These are, when we say annualized, it means it's adjusted for the seasonality. And the transactions are still 4.2% higher than January of 2024. So we saw easing happen December to January, but when we look back, there's still some improvement. So a little bit of a mixed bag here. The prices are up, though, here in the Northeast, 9.5% year over year. Median home sales price in the Northeast, $475,400. This is the highest regional appreciation, and that's due to this limited inventory. There's not a lot available, pushing competition even higher. Overall, inventory trends throughout the country, well, unsold inventory actually increased 3.5%. These are homes that did not sell and that are still on the market. And again, this is a national representation. And that's 1.18 million homes, seasonally, annually adjusted, equaling 3.5 months of inventory. As another reminder, I mention it every time we report out on the National Association of Realtors existing home sales data. A healthy amount of inventory is around 6 months, and we are still pretty far off of that. Supply and demand imbalance continues to persist in the market. The supply lacks, the demand continues to grow. This is going to wind up creating more and more problem as time goes on. And some people are waiting for inventory to open up for there to be more homes that are available. But there's an important thing to note on that. I had a wonderful meeting yesterday with a realtor partner of mine, and the discussion was surrounding this. And one of the elements that not a lot of people recognize is when more inventory becomes available, that means you have more people selling. Most of the time, especially if they haven't sold yet. Let's be honest with ourselves. The reason why people are selling right now are because they absolutely have to. Anyone who's making a judgment call on whether or not to sell, normally they're not selling. They're staying on the fence and waiting it out. So death, debt, divorce, these are the top 3 reasons right now most people, particularly speaking to the Northeast, most people are selling. Part of the reason why they're not selling, for those people who are sitting on the fence, where are they going to go? While inventory is what I'll call anemic, they don't know where that next step is going to be for them to move. And then if they do that, there's a ton of competition. So to go back to my point in the conversation I was having yesterday, something that people aren't aware of, when the inventory goes up, competition is going to go up. And the competition that's going to be present in that market are people selling their homes. We just talked. 19 months of price appreciation. People who sell are likely going to be sitting on a lot of equity. When they're buyers in the market, they're going to be super competitive to deal with. We're going to get into that in a second because there's even more competition that continues to persist, which is a bit of a head scratcher for me personally. But if you're going to have that timeline waiting for more inventory, it may not be the move. We just talked 19 months of price appreciation. We can only look to that so far. Doesn't necessarily mean that's where everything is going over the next 19 months. Anything can happen. Real estate doesn't exist in a vacuum. It is also reliant and dependent upon inflation, upon the job market, upon a number of different things in the markets. So when we're considering all of this, we need to take into account quite a lot. But if you're going to take anything away from this part right here, here's the point. When there is more inventory, competition will increase as well. So bear that in mind. Does it make sense maybe to start fighting and duking it out in this current market, albeit it is still competitive here in the Northeast, particularly in North Jersey? It may still be worthwhile to take up that fight now instead of battling it out with other buyers that are selling property that could very possibly have quite a hefty down payment because of the equity they have in the homes they're selling. Speaking of which, let's talk about the buyer composition that we got from this report. So with mortgage rates being at around 7%, it continues to hamper affordability, and that, by the data from this report, translates to consuming about 25%. 25% of median household income going straight to housing payment. It's kind of crazy. First-time homebuyers, they accounted for 28% of the purchases in January. That's slightly up from 2024's record lows, but well below what the average norm is when we talk about buyer composition. Buyer composition, historical average for first-time homebuyers, 40%. So we're making progress looking back in the short term, but when we zoom out, we're still well away from getting back to a normal market and a healthier operating market. Cash transactions. This is where I put that asterisk. Cash transactions accommodated 29% of the sales in January. That's really tough to compete with when you have financing. Now, here at Rate, we have some strategies that have proven to be successful to beat out cash, and there's ways to do it. But the fact that there's still 29% of the transactions in January that were cash is kind of crazy. I personally had been expecting for some time that we would start to see a decline. And at this point, after all the COVID relief money was gone for years now, and we hear about the American consumer drawing down on their savings because of the high inflationary environment, we talked on past episodes about that really big affordability gap, with wages only increasing about 8% in the time period from November 2019 to November 2024, while inflation price increases were in the range of 22%. Well, that gap creates a drawdown on savings or further extension on credit and overextension on credit, things like credit cards. But there's still a lot of cash out there. There's still a lot of cash out there to compete with. So it's really important that you work with a mortgage professional that can implement winning strategies for you if you're a prospective home buyer. So bear that in mind. Overall, if we're just going to look at the total picture here, this is not a report inconsistent with what we've been seeing on a monthly basis for quite a while now. We know the rules of engagement. Now it's up to us, for me as the professional assisting the families and clients that I work with, to best prepare them, best prepare their expectations for what it means to be a buyer in this real estate market, and what we can offer and what we can do to help shorten up the time for shopping and be as effective as possible so that you have a winning bid accepted sooner rather than later.